What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today, my friends. Hope you're having a wonderful day. Hit me with a one if you can hear me loud and clear. Today, what we're doing, we are going to be talking about a swing trade and how you can trade one time a week using specific swing trade setups to really take the pressure off of trading and just to make it as simple as possible. So I want to share with you the strategy that I've been able to build over the years step by step and make sure you guys are ready to rock and roll for Lotto Friday. Lotto Friday is usually a huge day, guys. So I'm extremely excited for that. All right. So if you're ready, my friends, let's step into the war zone. All right. Who do we have in the building? Hit me with the one. You can hear me loud and clear. Candace, what's going on? Ram, Dr. D, Abundant. What's going on? Trading Wars Army. Good to see you guys. And what we're going to do right here, guys, is we're going to go ahead and we are on ES. Okay, so this is futures of the S&P 500. All right, what's going on, Ivan? So the simplest setup that we like to take is what we call the inside bar breakout on the weekly chart. It could be on the daily. It could be on literally any time frame. Okay, so here is our inside bar. All right, and we've actually taken this back to back. So we took this in the week of the 21st of August, and then we again took it this week, which we triggered. And all we're doing right here, guys, is we're taking the break of the inside bar because the inside bar, what it represents is consolidation. What's going on, guys? Mike, what's going on? Trading Wars Army, what's going on, brother? All right. So I walked you guys through this on Sunday, and I'm gonna walk you through this one more time. Okay. And let's talk about the concept here. So what is the concept? Okay. So right here, let's go ahead and change this contract to December so that we don't see the gap in the chart. So ES right here, my friends, and you're going to go ahead to December contract right there. Okay. If we go here to the weekly, so we can see the December is still there, right? And then the September, if we go over here, so again, type in ES like this, and we go hit it again, September, or you can do ES1. There is a gap on the chart right there. Okay. So make sure you're aware of that. That gap is not really a gap. It's the contract roll. You click on here, you could see it. The September contract rolled into the December contract. And sometimes there's a little discrepancy between the contracts. Okay. But let's go ahead. Let's go back to the strategy here. So what is the basic concept here? So let's write this down. After inside week, there will be a breakout. Double inside week is a low probability. Okay. Hit me with a 5 if that makes sense right there. So the whole thing right here, guys, is when we see a yellow bar. So yellow bar is an inside bar. It's a free indicator that I have, tradingwars.com/resources. Okay. So let me just go ahead and bring that up here. So if you go to tradingwars.com and you go to resources, you can add these indicators for free. And I'll just go ahead and I'll link it in the chat right now. Scroll down right here. So here's the Trading Wars indicators. There's copy right here, and I'll paste it to you guys. So the yellow bar is a consolidation bar. All right. So let's go back here to the yellow bar, and let's go ahead and let's look at the last 10 bars. Okay. So I don't know why it didn't let me copy paste. I sent it to you guys one more time. Okay, there you go. So let's look at the last 5 to 10 inside bars, these yellow bars, and let's see if we close with an inside bar right after that bar. Okay, so if we did, you'll see 2 yellow bars in a row. Hit me with the one if you're following me. So what we're trying to prove here is after an inside week that we're likely to actually break up. Okay. And we were able to capture that breakout this week using our levels and using the same concept. Okay, so I'm going to walk you through. So this week, obviously, we broke out already. No double inside bar. That's one. The second one here broke out, no double inside. The third one created an outside bar, still a breakout. The fourth one, an outside bar, still a breakout. The fifth one, a breakout. Sixth one, a breakout. Seventh one, breakout. Eighth, breakout. Ninth, breakout. Keep going. 10th was a breakout. 11th was a breakout. 12th was a breakout. Okay. 13th was a breakout. 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 20. So right here. So the 24th bar, all right, This was back in 2018 in February after this inside bar produced a double inside bar pattern. Hit me with a 7 if that makes sense. So the whole concept right there, guys, is when we see that inside bar close, we're expecting volatility to crank through the roof. We're expecting it to go up. We're expecting a breakout. We don't necessarily know the direction, but we're going to position ourselves in the best possible situation to take the correct direction. But you're never going to know 100%. But the concept of this is it's rare to have 2 weeks of consolidating price action. All right. So we're going to go here now and we're going to replay this week. And then I'm going to show you guys the exact setup. Okay, step by step. All right. So if we look here, this is the hourly chart. What we can see, we're going to go back to the weekly and let's draw some boxes. All right. So the boxes are going to represent the inside range and it's going to represent the bigger range. So this is the bigger range here, like that. And then the smaller range is the inside bar, which is inside of this range, like this. Okay. It's right around there. And we're just going to make this there. Now we can go to the hourly. So there you go. So this is pretty much what we're looking at right here. So this is an inside week inside of a bigger week. And if we were to use the arrow tool, what we can see right here, I keep losing this arrow tool, guys. There it is. So what we can see is this consolidating pattern. Okay, so there's the higher lows. There are the lower highs right there. Same with the 6 if you're following me so far. So we have that tightening of the formation. We have that consolidation. We have the price action getting tighter on the weekly basis. And what we're doing is now we are saying we're likely to break out of this box. We can't stay in the box forever because the market has to go up or down at some point. It can't always go sideways, right? So we wait patiently for the sideways pattern. And then once we get the sideways pattern, then we set our levels. Okay, so here we go. So I shared this for free on the YouTube. Make sure you're subscribed. And I also shared it on the Discord for members. So I'm going to go right here to the SPY swing 1 trade a week. So here we go. So our long plan was 452,150. So let's go ahead and let's clear up everything here. Okay. So let's get rid of those lines. Let's just make these. Can I make these boxes a little bit smaller? Okay, let's make these smaller. Okay. So pull this back to here. Pull this back as well. I got to go back to the weekly and we are going to hit the replay again so we can walk through. Boom. All right, here we go. Here's the hourly. Okay, so the stage is set right here. That's our inside range. This is our bigger range. And now we have to figure out where do we want to get long and where do we want to get short. That's what it comes down to at the end of the day. Well, let's talk about that. Like where could you get long and where could you get short? Where would you want to do that? Where would you want to do that? Basically looking on this. So what I've come up with here, guys, are something I call trigger levels. It's basically a formula that I developed over the years to help me take these trades. Okay, so we want to go long at 45.2150. Right there. I'm going to put this in green. And then we want to go short at 4443. Okay, so I'm going to copy this and I'm going to paste this down. 4443. I'm going to put this in red. So now what I basically created is I said, okay, I want to go long above that level. And I want to go short below the red level. So I'm creating a very simple plan. If it goes above this level, I'm going long. If it goes below this level, I'm going short. And the reason why is because I'm anticipating if we were to cross this line right here, that we would break through this box. Okay? Hit me with a 10 if that makes sense. So that's the whole game plan right there. So I'm saying if we cross that green line, I'm expecting us to break through the box. Okay, so let's go ahead now and let's play the price action. Bang, bang, bang. So we start off the week. So let's go ahead and just cancel this line. This right here, guys, this is Sunday. So there's our green line. We're just waiting for that to get filled. Bang. So there's the fill right there. So this Monday at 1 in the morning. So if you're trading futures, you have the access to after hours and you can set this overnight and just leave it. That's why I love trading futures with interactive brokers. Okay. So we're in the trade at 1 a.m. in the morning. You're sleeping, you're hanging out, whatever, the trade gets filled. What do we do from here? So go ahead, just you guys tell me, because I want to talk about it very logically. So what you'll see a lot of times is people will say stuff like, well, as long as we're above this, I'm long. As long as we're below this, I'm short. This, that. But what's the plan? Where's the entry to stop loss and the target? Anyone that can't tell you entry, stop loss, and target is not really trading. What they're really doing is they're just doing observations. Okay. So they're like, oh, well, above this level, we're going to go up, blah, 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 blah. But what are you risking? What's the money behind it? Okay. Anyone can sit here and talk about that, but what's the money behind it? So this is what we need a plan. Okay. So here we go now. So here's my plan. So long 45, 21, 50. So what you want to use is the position tool right here. Okay. 45. So you double click and your inputs, your entry is 45, 21, 50. Your stop loss is 44.82 and a quarter. Okay. So stop 44.82 and a quarter. And the target, so this is your initial target, 45.58. 45. Okay. So this is a basic setup that's going to give you about a 1-to-1 risk to reward. Hit me with the 75 if that makes sense. So now the question is, how much do we want to risk? Okay. How much do we want to risk? So let's say we want to risk $10,000. So we're going to go type that in, $10,000. Okay. So in order for me to satisfy $10,000 of risk based on this setup, I need approximately 5 contracts. Okay. So we're going to risk $10,000 on this together. And we need 5 contracts. Why? If you use the measuring tool right here, we're risking about, let's say 40 points a contract. 40 points a contract is roughly $2,000 times 5 is 10 grand. Hit me with a 6 if you're following me. Okay. So there now we have something extremely mathematical and precise. We have an entry stop loss target. We want to risk $10,000 a trade. We need to use 5 contracts. There's our stop loss. Here's our target. Now let's proceed. Okay, so here we go. So throughout the week, this is on Monday. This is during regular trading hours. We're getting about halfway to the target. Okay, then we come back, retest that level. This is around Tuesday. Okay, I'm just going to bring this out here. Go in the red a little bit on the trade here, guys. And then finally, we start to rally. So this is after the CPI. Finally hitting our targets right here on Thursday. Excellent. Hit me with a 10 if that makes sense. So that's 10 grand right there. So I'm going to go ahead and, so for day trading, I like to use 400 bucks. When you're doing these bigger swing plays, you can definitely use the larger size because you're risking, your range is a lot bigger than on a 5-minute chart or 2-minute chart. Okay. So that's it. So this right here in the Discord, my friends, this is called SPY Swing 1 Trade a Week. So I try my very best to find the absolute best trade every single week if you just want to do one. Okay, so if you don't want to day trading has been a little bit harder these days. If you don't want to day trade and you just want to take one trade, that channel is designed for you. And you can go ahead and just, we've been on a really good winning streak with those 1 trade a weeks. I think the last 3 or 4 1 trade a week trades have been really profitable and really good. And a lot of people are absolutely loving it. So I want to share with you guys, that's it. Like this is Thursday right here. So what you do now, you take some profits. So let's say you have 5 contracts, maybe take 2 or 3 off and then keep another 1 or 2 on for a bigger move. And those 1 or 2 contracts can go forever, right? And in theory, if you have a one runner that just rips, you can double, triple, quadruple your account if you're managing the money the right way. Okay. Hit me with a 5 if that makes sense. All right. So there we go, guys. So that's that basic 1 trade a week setup. I really, really like it. And check us out right here, guys, tradingwars.com. If you want to get access to that SPY room, it's right here, $49.99 a month. Or you can grab any one of our 3 books. It'll come with 1 month for free in the Discord. What I'm going to do right now to celebrate that swing trade, it was a really good one. And I want to give back a little here. So instead of 1 month, if you buy any one of my 3 books today, you will get 2 months. So 60 days for free in the Discord. And this is everything, guys. All the documented trades in here. Really, really nice to give you some education and come trade with live with us for Lotto Friday. I absolutely love Lotto Friday. It's one of the best days of the week. All right. The other thing that I want to show you guys is an advanced pattern that I am developing and I'm trying to become a master of. Okay. So hit me with a 17 if you're interested in advanced Fibonacci patterns. So this is a pattern that I'm going to work on and I'm going to invest about $100,000 into this pattern. So as you guys know, I've developed the Fibonacci Trading Wars Society. And one of the things I'm going to do is the Fibonacci Mystery School. I already have one video in here. I'm going to do some more advanced Fibonacci in the mystery school. This comes with my new book. If you guys are trying to get the new Fibonacci book I wrote, it's not ready yet, but it's on pre-order. Just email rich@tradingwars.com. It's 20% off. It'll be $120 and you'll get access to the society for life. Okay. But let me show you some of the things that I'm trying to do right now. So my goal is to risk about $100,000 developing this plan and this system right here. So let me go back to ES. So one of the patterns that I'm working on, guys, it's somewhat of a butterfly pattern here. So I'm going to show you this. So this is the hourly chart for futures. Um, so you could see back on Friday, we had this low to high right here. And you could see we came into the 618 and we traded to the 272 extension. All right. And what this setup is, guys, I'm going to go ahead and draw it for you. It's A, B, C, D completion right down here. Okay. So your entry can be on the 618 or the 786, and your stop loss is going to be at the swing low. All right. So that's something I am developing, and I'm going to put aside $100,000 of capital to trade this. Whether I blow up that $100,000 or not, I don't care because I'm trying to get better. All right. Hit me with a 5 if you guys feel that. I'm trying to get better and I don't care what the price is because, you can look at this stuff in hindsight and everything looks great in hindsight, guys. Trust me, everything looks great in hindsight. So I'm trying my best to just do this and develop this, trying to put some nice colors on here too. But I want to develop this new one and this is going to be a part of the society. So check that out, guys. Email me, rich@tradingwars.com if you'd like to start to develop some of these patterns. But let's go ahead. Let's just play around for a little bit here. Let's go to the SPY. Let's go to 15-minute chart and let's see if we can see some of these patterns. So let's pick a month. Pick a month for me, guys. I haven't done this before, but I just want to talk to you about some of the Fibonacci patterns I'm developing here. So pick a month right now in the chat and let's look at it together. Pick any month. We'll start off with a 15-minute chart and then I'm going to play around for a little bit here and just talk to you guys about some of the things. What do you guys have? Jan, Feb, March, April, May, June, July. Okay, so August. So I see RAM with August. So we go right here. We're going to go to August 1st. Okay, so let's start off with the 15-minute chart here. So August 1st is here. 2nd and July 31st. August 1st is here. Okay. All right. So what the goal of this, guys, is to use the initial Fibonacci direction, take that, identify a 618 or a 786 pullback, and then from there, look for the extension and then take the retracement again. Okay, so the first real Fibonacci I see on this chart, there's nothing really happening here, but we have a very clean Fibonacci here. If I go from high to low like this, so you can see we came into the golden zone short and then we made the new low. Okay. And as you can see here, I'm going to draw it with the arrow. So we push down, pull back up. And then from there, we made a new low into the targets right here. And then from there, what you do is this. So now you take this anchor right here and you move it all the way down to the lowest point, which was right here, or you can move it right here. Either one of those are fine. So this anchor or this anchor, either one is fine. And then what you're trying to do right here, guys, is now you're going to take the bigger picture here and you're going to take this leg. That's your new leg. And you're going to take that pullback right there. Okay. So here is your short 618, 786, absolutely destructive crash right there. Okay. So that was the first one. Let's see if we can continue this now. Okay. So that's the first big winner. Then from there, if we go high, this is going to work really well with options. So here's our high to low. Here's our pullback into the Fibonacci. Here's our trade to the 272 target. And then you can see from here, unfortunately, it never came back. So then you don't have a pullback to trade. So you just keep going. All right. So we're looking here for the new lows or the new highs. Okay. So in here, you can see we have this one right here. This is a low to high. we go to the 272 extension, we come back down. And then if we move that anchor up, so right here did not fill anything. So we just repeat now. So we come back here from this anchor low to high like this. Here's your 618. Here's your extension right here, guys. And then from here now, you go ahead, boom, right there. There's your 618 entry. So you could see on this, guys, depending on if you're going to scalp it or not. So if you scalp this trade here, that 618 did pop up enough for you to take some profits. Unfortunately, though, it came and it poked out the stop loss and then it was gone. All right. So that one depends on if you want to scalp it or not. But I think it's really good high probability setups with shorts. Okay. So here we go now in September. So let's talk about what's been happening here. So I'm looking for some fibs here. So this is recently. So here we go. So if we come off of this gap high to low right here, you can see we made the new low right here. Then you just take this anchor, boom, boom, boom. There's your short on the 618 right there to the 382. That's money. And then right now we have this playing out. So if I come here, so this is playing out right now. If I go from low to high up here, there's your 618 right there. And we just made a 50% extension. So what the goal of now is we're going to draw that like this. And then we're going to look for this completion into the 618 to buy the dip and to let it rip. Okay. I know it sounds kind of complicated there, guys, but this is kind of the next stage in my career and my trading is I want to do some more advanced patterns because I really love the Fibonacci and I feel like there's a little bit more that I can do to take my trading to the next level. I mean, I've been profitable with Fibonacci just trading the simple legs, but I really want to take it to the next level now. I really, really do. Okay. Hit me with the four if that makes sense. So this is the type of things that I'll be posting in the Fibonacci Society right here. It's going to be more of like, educational style and just learning. And we're going to be, let me risk my capital. So here's another one here, guys, high to low right here. Boom. Here's your extension right here. And then we bring it down right here. Bang right there. Boom. There's your 618 and there's your profit taking right there. Okay. So there's a lot of opportunities here and we're going to move through it together. We're going to continue to have our basic Fibonacci setups, but this is something that I'm planning to add going forward. All right, guys. So I want to thank you for your time and I hope you like that little lesson there and a little bit of glimpse of the future. And I really appreciate you. Please comment, like, subscribe. There will be a $50 giveaway this Sunday for Trading Wars Army members. So make sure you guys are subscribed and ready to go. And yeah, that's it, guys. I'm going to be taking tomorrow off. I'll be trading in the morning and then just heading out and just keep it nice and simple. All right. Thanks so much for your time, guys. Take care.